A very warm welcome to you as you join us on today's episode of Tax Matters, and welcome to the month of September. Welcome to the Ember Month. 2020 is gradually packing its bags. We pray that we all live to see the end of the year. Today on Tax Matters, we are going to be discussing an uncommon topic that is nevertheless important, especially to the well-hid ones amongst us. The Italian economist Vilfredo Pareto developed what is known as the Pareto principle, which states that for many events, roughly 80% of the effects come from 20% of the causes. With regards to taxation, it has been discovered that in most countries, the top 20% of income earners pay roughly 80 to 90% of income taxes. And so the well-hid ones in the society, the high net worths, are of particular interest to tax collectors. Efforts are continuously being made to get high net worth individuals to pay their fair share of taxes because that is really the essence of taxation, the rich subsidizing the poor, even as the poor ones are also encouraged to pay their taxes for them to imbibe the culture of good citizenship. This was the focus of the address of Vice President Yemi Osinbajo at the 2018 CITN Annual Tax Conference.
That our tax to GDP ratio is one of the lowest in the world would in fact really surprise no one. As of May 2017, of the roughly 70 million Nigerians who are economically active, only 14 million, or 20%, paid any federal or state taxes at all. The number of Nigerians who pay more than 10 million naira in self-assessed taxes is even more astonishing. As of December 2017, only 943, that is 943, not 1,000, not up to 1,000, 943 Nigerians pay self-assessed taxes of over 10 million naira. Of that number, 941 live in Lagos State. The other two live in Ogun State. I think you ought to look at the gentleman sitting next to you, that millionaire sitting next to you, and ask, have you managed to pay taxes, self-assessed taxes?
Food for thought. To think that private jets are all over the place and that Rolls-Royce is becoming toy in Nigeria. That was at the Annual Tax Conference in May 2018. We are reaching out to see if the numbers quoted by the Vice President have improved since then. You can be sure that we will serve you updates, hot and fresh on tax matters. It is an established fact that assessment and collection of taxes come easy only when the tax collector has access to information on the taxpayer. Enter AEOI, Automatic Exchange of Information. What is AEOI? That is the focus on today's episode of Tax Matters. In the month of August, a series of stakeholders' engagements were held to give firm root to AEOI as all countries, including Nigeria, have signed up to commence reporting by September 2020. Tax Matters sat down with two gentlemen who are directly involved in the administration of the AEOI scheme at the Nigerian end. Mr. Matthew Bojumbola is the Director Tax Policy at the FRS, and Mr. Femi Edgar is the Head Exchange of Information at the FRS. We'll begin by getting a sense of what this AEOI is all about. Joining us on today's episode of Tax Matters is Mr. Matthew Bojumbola. He is the Director Tax Policy at the FRS. Mr. Bojumbola, welcome to Tax Matters.
Thank you very much.
Could you please give us a sense or a background, if you like, to the issue of AEOI, Automatic Exchange of Information?
Thank you very much. Before we move to automatic exchange of information, let me explain what we mean by exchange of information. Exchange of information is the collaboration of tax authorities in different countries to fight tax evasion by making information available to one another. And this happens usually when you have a company in your country and is operating in another country, the distance make it difficult for the tax authority to go and check information in another country. And so the tax authorities came together under what we call the Global Forum for Tax Transparency to say that authorities could exchange information based on agreements.
Mr. Femi Edgar, he's the head of Exchange of Information, FRS.
That question, in answering it, might require me to talk about the whole picture of what is exchange information and why. Critically, if you note that in most countries of the world, even in Nigeria, your biggest taxpayers are often either multinationals, that's corporate entities that have their tentacles all over the world. And even the individuals, most of the time you have high net worth individuals that are earning income not just from your jurisdiction, but other jurisdictions. They are maybe in Nigeria, both at the personal income tax end and corporate income tax end. Maybe they account for over 80% of your tax revenues. Now, the way their life is and their business is that they are earning income from everywhere. And most countries do what they call worldwide taxation. That means when they're taxing the income of a resident of that country, they're looking at the income that you've acquired or earned from all over the world. Now, so if I'm taxing a corporate and I want to tax his income from all sources all over the world, but what I know only is what I have in my country, how will I know what has happened in other countries so that I can have a good view and I can make an objective assessment of his tax position? I need to get information from elsewhere. Now, that brings us to extra information. There are countries over the world, all over the time in history, trying to ensure that the taxpayer have, a good look at what is happening about his tax affairs. So I need to go to other countries and ask for my partners, other tax authorities who have that information, who can assess it for me, to give me that information so I can make a good decision. The way countries have done it over the years is to sign what we call tax treaties. The ones that you're familiar with are what you call the avoidance of double taxation agreements. But of recent, you began to have other kinds of agreements that are focused on what they call mutual assistance. That means countries assisting one another in the area of exchange information and other areas. And so Nigeria has a number of such agreements, both the avoidance of double taxation agreement or the multilateral agreements. We have members or parties to the ATAF one. Then there's one brokered by the OECD, which has over 130 partners, countries. And so what it means is that Nigeria has the legal tool to get information from over 130 countries, which is a very powerful tool.
There are three ways in which tax informations are exchanged. There could be an exchange on request, whereby, for example, Nigeria could write to France and say, give me this kind of information. There is what we call spontaneous exchange. For example, Nigeria could be auditing a company that also has presence in France, and then we see an information that we believe is relevant to France. We are able to exchange that information under the spontaneous exchange. And then the third one is the automatic exchange of information. Now, the automatic exchange of information started after the United States of America came up with what we call FATCA, whereby they require all banks to provide information as to assets, that is financial assets of their citizens in those various countries to the US IRS. The US IRS does their internal revenue and their inland revenue service. So after that episode, the rest of the world came together to now design a system such that countries now on an automatic basis. And what makes it automatic is that there's no request, and it is done through ICT protocol, so there's no human intervention. So that's what makes it automatic. So that is the background to that. Nigeria signed up to the convention, international convention in 2017. And we have been putting together, for example, the legal framework. We had the regulation to govern this in 2019. We have issued guidelines to help us in 2019. Implementation now is starting in 2020.
Before automatic, there's what we call the information request. That means each time you information, you have to communicate to your treaty partner, the competent authority. You have to talk to the other country's competent authority and say, okay, can you give me information on this taxpayer that you have in your country? And the information must be specific. Maybe I want to know what is in the bank account that so-and-so person has opened in your country, if he has any. Has he earned some interest? Has he earned some dividends? Has he earned royalty? Or maybe he has some business that is a director there. He's earning director's fees. Because I want to tax him on his global income in Nigeria. You do a request. But in 2013, countries across Europe began to exchange information electronically. They just collate the information on individuals and corporates who are operating in their jurisdiction, but they are not tax residents of that jurisdiction. I'm sure that you understand what I mean by tax residents. It means that where you are supposed to pay tax or where you are assessed for tax or seen as a resident. It's not about whether you're a citizen or whether you are registered in that country. Tax residence rules change from country to country. But, the issue is that you begin to share information in Europe. So they began to do it automatically. They collect, using ICT tools, all the information on incomes, such as interest, business income, royalties, and began to exchange it among themselves. It's okay, I have in my country citizens of United Kingdom or residents of United Kingdom who I see are earning this income. So the German authority will exchange that information with the British authority. They were doing it automatically, since 2008, 9. By 2014, the G20, that's the richest 20 countries of the world, had a meeting and said, let's formalize this and let's have a common standard for which this information we are collating will be captured and reported and exchanged, because you need to collate in a particular format and you now need to exchange it. And in 2014, it was now decided that this system, let's open it up to the rest of the world to join, so that we can now, as we're all collecting information, we'll put in place a treaty. All nations that are interested will sign, apart from the Europeans. They will sign onto it. What we're doing is that we'll be getting information from one another. It's a tool for collaboration. So when you hear automatic, means they're using ICT tools electronically, and they decided that what will happen is that in a particular period every year, we will all exchange information, and it was set for September. That every year, everybody will bring the information on the tax returns of other countries that you have in your country, reported by financial institutions. We will all exchange it in September every year. So that's how the automatic exchange of information came into being. And as of today, there are over 100 countries who have been doing it. Started in 2017 with 41 countries, 59 countries joined in 2018-19. Other countries are going to join in 2020. For example, Nigeria is going to join this.
So when is all this taking off?
In Nigeria, we're set to begin to get information from financial institutions from the 1st of September. So they have the window based on what were put in the public notice. All financial institutions must file returns, AEOI returns, CRS returns, by 30th of September. So between 1st and 30th, the returns must come in. The whole essence, the whole system is a means to an end. One is to optimize the tax assessment because of information. The taxman thrives of information. If you have information and data about the incomes of your taxpayer, the global income, for example, you'll be in a better position to determine a tax position. But also, we see it as a tool to encourage voluntary compliance. That international collaboration is helping taxpayers change their behavior. For example, if a taxpayer knows that the Nigerian tax authority is likely to get information from a UK tax authority about some incomes he has earned there but has not declared at home, what is likely to happen is that the taxpayer will declare that income before it is reported to us. So it changes compliance behavior, and also the key thing that it will do to the government coffers is that it will improve or optimize tax revenues that are coming from especially the big taxpayers, multinationals, and high net worth individuals. The AEOI, all over the world, most of the countries that participated in it are raking in billions of dollars additional tax every year. Some countries, they are just having a good time with that because of that collaboration, because it gives visibility. Sorry to say that most taxpayers want to hide a lot of things that's happening, but this collaboration has helped to provide visibility, and by so doing, I would like to repeat, is helping the taxpayers, choose to voluntarily disclose instead of being discovered, because that will come with sanctions also.
London, New York or Lagos, business or holiday, home or office, you can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt, and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC or for other transactions that require stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government coffers so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
Welcome back. The program is still Tax Matters, and we are discussing AEOI, the platform under which the whole world is coming together to exchange information on the financial activities of individuals and corporates all over the world, real-time online. Call it Big Brother if you like, but definitely going forward, there is no hiding place for the tax dodger. We'll move on. When you were sharing the background to this issue, you mentioned that information could be by request or spontaneous or automatic. Now, what kind of information are we talking about here?
We are talking about taxpayers' information, and this is very wide. For example, the name of the taxpayer is a taxpayer information. The address of the taxpayer is a taxpayer information. The nature of business of the taxpayer is a taxpayer information. The location of his branches, if any, is a taxpayer information. Then we also now have specific information that comes from the tax returns that the taxpayer makes. For example, the financial statement is taxpayer information. The tax computation is taxpayer information. Document that back up expenses of business is taxpayer information. So those are the kind of information we call taxpayer information. So any of these is involved in exchange of information. However, when it comes to automatic exchange of information, it is only information about financial accounts. And when we talk about financial accounts, it talks about accounts we have with financial institutions, such as banks, as stockbroking firms, insurance firms, and the like.
I don't think people keep money that often. Most of the people we're dealing with, persons, let me use the word persons as a tax language, other than individuals or corporates, they wouldn't keep money under their pillows. Every kind of income they earn, whether they are direct income like salaries and wages or passive income, interest, royalties, dividends, it goes into some kind of account. That is what we're looking at. What's happening in that account? It should be reported. So what happens in an account owned by a person, either a corporate or an individual in another jurisdiction, should protect to their home tax resident jurisdiction, the year after. So what has happened in 2019, for example, should be reported in 2020, so that the tax authorities of that person, corporate or individual, will have a better idea. Because a lot of times when the taxpayer is reporting, taxpayer might not report every source of information or every source of income, sorry. So financial accounts from entities that are called financial institutions, and the phrase financial institutions who are supposed to make this report span from what, if you say what's a financial institution, most people just say, okay, it's a bank. It's not just banks. Under the common reporting standards, you find that, there are other kinds of entities that are qualified as financial institutions because they are keeping, information that involves incomes in money terms of individuals or corporate entities. Brokers, asset management companies, mortgage institutions, investment entities. And in Nigeria, we're actually identified in that group over 500 entities who are likely to have to report on financial accounts with them under the common reporting standards.
What kind of international support are you getting for the automatic exchange of information?
Yeah, the starting point is that the whole system itself is designed by the international community. And we have a body that is called the Global Forum, which is the supervising authority, which is based in Paris, under the OECD, that manages the whole thing. And now what do we get as support? First of all, the standards comes from the OECD Global Forum, and is jointly designed by all the relevant members of the Global Forum. Nigeria is a member. Number two support we get is there's what we call a peer review, or what we call assessment. Before a country can participate in exchange of information under the Global Forum, the country must have been assessed on issues of confidentiality and data safety. And so for Nigeria, for example, we have been assessed twice. We have what's called the phase 1 and phase 2, which we have been assessed and we have passed. Now for automatic exchange of information, we are preparing, we are already being assessed, we are not just preparing, we have already started the process for assessment that will qualify Nigeria to do automatic exchange of information. This is another support we get. Another support we get is that when we have to enlighten our taxpayers, we get resources from the OECD, from the Global Forum to come and explain things to us. So these are different ways in which we get support, and not just only Nigeria, all other countries also get that kind of support from the OECD.
There is still more from our esteemed guests, and so do well to watch out for the concluding part of this feature on AEOI coming your way very soon. Stay safe till we'll come your way again next week. As we leave you with this parting shot. So what does this portend for persons and corporate bodies?
What it portends, which I have alluded to, is be transparent. Don't hide anything from the taxman. I always say to people, the cost of non-compliance is much, much higher than the cost of compliance.
I would say with this automatic exchange of information, there is no hiding place.
I think I will agree with you if you say that.
Thank you for watching.